Hey there! Did you know that women now own 39.1% of all businesses in the US? That's a pretty impressive jump of 13.6% from 2019 to 2023, as highlighted in the 2024 Wells Fargo report on the impact of women-owned businesses. Despite this growth, it's still tougher for female entrepreneurs to get their hands on small business loans. With interest rates on the rise and stricter lending criteria, it's a bit of a challenge out there. A study by the Federal Reserve in 2023 found that a smaller percentage of women got approved for loans in 2022 compared to men. That's why it's super important to shop around and compare what different lenders have to offer, so you can find the best fit for your business needs. Keep pushing forward and exploring your options. Armed with the right knowledge and resources, you can navigate the path to securing financial support and turn your business aspirations into reality. In this video, I will provide a detailed overview of available small business loans specifically tailored for women, including government-approved options and innovative financing platforms. 1. Funding Circle SBA Loan. If you're looking into a business loan, having a good credit score definitely helps. Normally, you'd want your score to be 670 or higher. But if you're considering Funding Circle's Small Business Administration (SBA) loans, the good news is you can qualify with a credit score as low as 630. With Funding Circle, you can borrow up to $500,000, and they give you up to 10 years to pay it back, which is pretty generous compared to many other lenders. Just keep in mind, these loans are geared towards businesses that have been up and running for at least 2 years and are pulling in a minimum of $400,000 in revenue. Here's a quick checklist for you. Your business should be operational for at least 2 years. You need to be making at least $400,000 a year. Make sure you don't have any federal tax liens hanging over you. A personal credit score of 630 or more is necessary. For loans between $25,000 and $350,000, you might need to secure it with a line on both the financed assets and your business assets. For anything over $350,000, you'll definitely need some collateral, which might even include personal property if your business assets don't cover it. Just a heads up, these loans aren't for newbies and you need to meet these high revenue standards. Plus, the collateral part is something to think about. 2. Fora Financial. If you're running a smaller business and finding that the typical minimum loan amounts of $50,000 or higher are a bit too steep, Fora Financial might be just what you need. They offer loans starting at just $5,000, so you can borrow exactly what you need without going overboard. Fora Financial is pretty flexible compared to other lenders. You don't need any collateral to qualify. All you need is a credit score of 500 or higher and a monthly revenue of at least $12,000. Here's a quick rundown of what you'll need to qualify. A credit score of 500 or more, at least $12,000 coming in each month. Your business should be up and running for at least 6 months. Make sure there are no open bankruptcies. One thing to keep in mind is that Fora Financial's loan terms are on the shorter side, maxing out at 15 months. Also, their rates can be a bit tricky to get your head around, ranging from 15 to 40 cents per dollar borrowed, plus they tack on a processing fee of at least 2.5%. So, if you're looking for a quick loan that doesn't require a ton of paperwork or collateral, Fora Financial could be a great option, especially if you're okay with the shorter payback period and getting a handle on their rate structure. Just factor in those fees to see if it makes sense for your business budget. 3. Amex Business Line of Credit. If you're in need of a flexible financing option for your business, the American Express Business Line of Credit might be right up your alley. You can get access to up to $250,000 as a revolving line of credit. What's great is that you can choose a term of 6, 12, or 18 months and use the credit line as needed throughout the term. You'll only pay interest on the amount you actually use each month. Applying is super quick and easy. American Express can get you approved in just a few minutes. Plus, they only require a personal credit score of 640, which is quite accessible compared to some other lenders. Just keep in mind, depending on the term length you choose, the fees can go up to 27%, with longer terms having higher fees. Here's what you need to qualify. Your business should have been operating for at least a year. You need a personal credit score of at least 640. Your business should be bringing in at least $3,000 in monthly revenue. A couple of things to consider. The credit line maxes out at $250,000. The APR can be on the higher side depending on the term. There are just a few term options available. This could be a solid choice if you're looking for a line of credit with a straightforward application process and manageable credit requirements. 4. Lendio. Lendio makes getting a loan for your startup pretty straightforward and flexible. Unlike other companies that might require your business to be up and running for a year or more, Lendio only asks for a minimum of 3 months of operation. This is a big plus if you're just starting out. With Lendio, you can apply for up to $750,000 in funding for new businesses, and if your business is more established, you might qualify for up to $2 million. The repayment period can stretch up to 25 years depending on the loan type you choose, which gives plenty of breathing room for managing your business finances. Keep in mind, Lendio isn't directly lending you the money. Instead, it acts like a matchmaker, connecting you with its network of lenders. This means the specifics of your loan, like the terms, rates, and eligibility criteria, will vary depending on the lender. Generally, for a startup loan, you'll need a credit score of at least 680 and a monthly revenue of $6,000 to get started. Here's a quick summary of what you need to qualify. A credit score of 680 or higher. Monthly revenue of at least $6,000. Your business should be operational for at least 3 months. A few things to consider. You'll need a relatively high credit score. Loan terms and rates can vary a lot because they depend on the lender. Be prepared for potentially high APRs. Lendio's approach could be a great way to find a loan that fits your startup's needs, especially if you appreciate having options and a straightforward application process. 5. OnDeck line of credit. You need quick funding for your business. OnDeck might be a handy option. Their application process is pretty fast, and you could even see the funds in your account on the same day you apply if everything lines up right. Here's how it works. If you get your loan approved and accepted by 10:30 a.m. on a business day, you could get same-day funding. If you wrap things up after that time, expect the funds within 2 or 3 business days. OnDeck also offers a line of credit with instant funding. Once approved, you can start using your credit line within minutes. However, keep in mind that OnDeck's convenience comes at a cost. The rates for their term loans start at 29.9%, and on average, you might be looking at an APR around 62.1%. They also charge an origination fee up to 4% and a $20 monthly maintenance fee for lines of credit. Here's what you need to qualify. Your business should be operational for at least 1 year. You'll need a credit score of at least 625. Your annual business revenue should be $100,000 or more. You must have a business bank account. Unfortunately, OnDeck isn't available if you live in Nevada, North Dakota, or South Dakota. A few things to consider. The APRs can be quite high. The repayment terms are relatively short. OnDeck isn't available in all states. If fast access to funds is a priority and you meet the qualifications, OnDeck could be worth considering despite the higher costs. 6. Bluevine. If you're looking for a business line of credit with competitive rates, Bluevine could be a great fit. They offer rates as low as 6.2%, which is quite appealing compared to many other lenders that often have double-digit APRs. Bluevine is also more accessible if you're worried about credit scores. They only require a minimum score of 625 to qualify. Plus, once you're approved, you can access your funds in just minutes. However, there are a few things to keep in mind. The maximum term for a line of credit is only 12 months, which is shorter than some other options out there. While the credit score requirement is quite lenient, Bluevine does ask for at least $40,000 in monthly revenue, which is a significant amount. Here's a quick rundown of what you need to qualify. Your business should be operational for at least 24 months. You need to bring in at least $40,000 in monthly revenue. A minimum credit score of 625 is required. Unfortunately, if you're in Nevada, North Dakota, or South Dakota, you won't be able to get a Bluevine line of credit. A few potential downsides. The terms are fairly short. The monthly revenue requirement is high. It's not available in all states. So, if your business generates enough revenue and you're looking for quick access to funds with low rates, Bluevine might be worth considering. Just be sure you're comfortable with the shorter term length and the revenue benchmark.